Okay, so today what we're going to be doing is an interesting breakdown video about the oil markets. Now, the oil markets are quite a big market that I've been trading for many years of my life, but it's also going to be quite an interesting video showing you the step-by-step breakdown of what I do as if I was going to be trading it myself without even thinking that there's the camera there. Firstly, I'm going to be explaining myself, but there's going to be a lot that I will share with you today that I haven't shared in my videos before. Make sure to stay tuned on this video. I think you're going to like it. So, hello everyone. Today I am going to be doing quite an interesting video. Like I said to you, it is going to be on the oil markets. This is a market that I've been focusing on for many years of my life, and it's a market that I really enjoy trading. In my background, I did a lot of trading in commodities, in mainly focusing on gold and on crude oil. And on top of that, I also focused a lot on trading the stocks of companies that were involved in mining of oil or gold. So I've always had quite a lot of experience doing it, and I've always really enjoyed it. Commodities trading is a very interesting form of trading. It's a trading that definitely goes back to historic times, hundreds of years ago. And it's definitely something that many people can learn a huge amount of fundamental aspects from. What I'm going to be doing in this video is talking about the step-by-step breakdown of what's happening in the oil markets, what I'm looking at, and the fact that this might be a trade idea that I want to take in the 2019 year. So just to introduce myself to you, my name is Morgan and I'm a professional trader. I trade on behalf of clients based all over the world. I manage capital for these clients, but on top of it, I run a trading academy. So I teach people about how to trade and invest as well. With all my years working in the markets, I've been able to develop an educational program that runs over 12 months teaching these students about how to trade and invest. So mainly for the purpose of my YouTube channel, it's to be able to share things with the public market that other people wouldn't be able to get access to, mainly because I feel being able to share my knowledge and educate others is the best way I can give back. Trading at the end of the day is a very selfish and lonely game, and being able to use these videos helps me communicate with my community and helps me at least find a way to give back in the shape and form that I can without giving my money away, which I don't really enjoy doing. So we're going to be jumping into this video and we're going to be giving a step-by-step breakdown of what I think is happening in the oil markets and what I'm going to be looking at as the most important points. So most importantly, to start out with, I've got my charts open. It's on the templates that I want, and I've got my notebook. To anyone who wants to use this template, it is the My Metatrader setup video that you can have a look at. I'll put the thumbnail over here and the link in the description down below to the video, so you can click on it and you can go and set up your trading platform to look just like mine. There's actually going to be an update on that video coming out sometime soon as well, so stay tuned on that. Subscribe to the channel, and then at least you can get access to those videos. Jumping onto the charts now, we're going to be having a look at the US oil markets. Now there's a difference between the WTI crude, the West Texas Industrials, and Brent crude. So focusing on that West Texas Industrials, that WTI crude is coming out of the US. Brent crude's usually coming out of the British region, European region, and they're priced at different values. So Brent crude is usually priced at around about $10 more, but you don't have to worry about that too much. The price action of both asset classes moves almost the exact same with a slight dispersion from time to time. I like to focus on trading US oil because the US oil markets have a lot more news flow. I tend to find that I'm getting access to a lot more information quicker than I would trading Brent crude. Might be only a little bit of a difference, but I tend to find that I prefer reading news coming from the US markets than the other markets. But getting onto the charts, I'm going to be giving you a step-by-step breakdown and then writing down the notes that I'm having a look at. So most importantly is to talk about what we call whole number resistance levels. So whole number resistance levels, if you think about it, $1, $10, $100, $50, etc. So increments of whole numbers. Now, most importantly is to realize that we're sitting on effectively the $50 level. So if you see over here, we'll put down a, there we go, just on, okay, that's the closest I can get it, just on $50 right there. So we've got that level tested right now. So point number one that I definitely have to write down is $50 whole number test. Now, that is an important part. Whole number resistance levels are seen as levels that in a way would be a level of support and resistance, like if price previously tested that level, except if price hasn't tested that level before, you'll see that very often, not all the time, but often, the price action would like to test that level. That's usually because some people will set their take profits. Let's say they're short from $60 a barrel, set their take profit at $50 a barrel, and then add in a buy order at $50 a barrel, and you'll get that bounce because of price volume moving. So that's just a simple technical indicator. So whole number support level is definitely point number one. So point number two is definitely going to be having a look at the weekly charts. Now, as you can see, we're sitting on the weekly charts and we've had an extreme bearish momentum. So we've had a couple solid weeks worth of loss, extreme bearish candles. Last week was an extremely large candle, a bearish candle. That was the starting out on the 18th of the 11th, 2018, so 18th November. So that was week number 3's candle. Now we're sitting in week number 4's candle. We got a nice bit of a spinning top candle over here, but the big one is to have a look at stuff like the stochastic levels. So you can see on the stochastic levels, now to anyone who doesn't know what the stochastic is, here's the thumbnail up over here. I'll put the link down below in the description. You can watch that video, learn about how to trade with the stochastic. Very, very important video as well. So going back to this on the charts, the stochastic is definitely very oversold. So in terms of that is to focus on making sure that we can point that as point number two. So point number two is oversold stochastic. Now that is definitely an important point. Now, another one that I like to make use of is having a look at multiple stochastics. So when you finish watching that video, you'll be able to see that the stochastic level is based on a period of effectively a moving average. So I've got mine at the K period of 14 here. However, I can also have a look at adding in a stochastic where I've got a 20 period, a 30 period, 40, 50, and 60. Now this sounds absolutely crazy, but what it is able to do is show me averages that extend further and further and further back. Now what this allows me to do is see what the strength of it being oversold or overbought actually looks like. So let's say, for example, it's overbought on the, oversold on the 20 level, but on the 60 level, it's not oversold. So this is a slightly more complex template to make use of. Then that at least shows me that the market might not be as strong. But now that we can see every single stochastic period 20 through to 60 is completely oversold. So point number three, on top of the fact that point number two is an oversold stochastic, we can say point number three, 20 to 60 stochastic is oversold. So although this is slightly more complex, what you'll be able to see for myself is, as a trader, I have to build certain templates. So I build templates that suit my criteria of how I like to invest my money in the market. And then as I'm flipping through all of these templates, I'm going to be seeing exactly which templates I want to have a look at. So I'll open up one template at a time and I'll start having a look at what the market looks like, basically through the eyes of these templates. And that's quite a simple step. And what that allows me to do is see things in the market that the indicators can show me that the price action won't be able to. Now, there are tons of traders out there that think indicators are for beginners, they're training wheels, they're this, they're that, they're the next thing. That's absolute rubbish. That's absolute rubbish. At the end of the day, there are indicators you can make use of that create calculations for us that we would otherwise have to do manually. These things definitely do work. Now, when I consider the fact that it's oversold, that's just not enough for me. So going back onto the charts, it's important that we can have a look at other levels as well. So if we go back, onto the simple template again, we're going to have a look at the fact that we also definitely have trend lines forming up. So I'm going to put back the $50 resistance, the $50 support level over there. So that's there for us as well. so we can at least see where that level is. Now, another one is to definitely have a look at where the other support levels are showing up. So we've got way back down here. If I take a arrow up, we're going to see over here we've got some level. Let me just make it a little bit bigger. Arrow properties, just make it like that. Okay, there we go. That looks much better. So we got support over here. We've got, give me another one. We've got over here, we've got again here, and we've got higher up on this level as well. So what that at least allows us to see is that this lower support level sitting at $42 a barrel is the next support level. So point number 4, which might not be a good point for us, is that next support. So I'd say point number 4, next support. It's actually shocking to see. I can film a video at a time of the day when I think I'm not busy, and then everyone wants to call and message me. It's just such a joke. So next support level sits at $42. So what that allows me to say is we're sitting at $50 a barrel now. That is our current support level. $42 a barrel, $8 away. So I've got an $8 risk disparity between where I am now and where I could be. Although we know $42 a barrel is a strong support level, price action could fall further, or it might not even get to that, level. But what that at least allows us to know is that between $50 a barrel and $42 a barrel, we need to understand what could happen between that. And that's when it comes down to having a look at the trend lines as well. So back onto the charts, an important aspect that I'd also have to look at is between these two levels, we've also got these higher points here that are forming a downtrend. So as you can see over here, we've effectively had quite a strong level forming up that forms a little bit of an X. So if you consider this, basically we have seen this happen many, many times in the past, where basically price action will form these complete X's, where price will form into a volatility funnel, it'll break out to the upside and then come back down to test that level. Now, this is something that I talked about in this previous video here, so make sure to go have a look at that as well. I'll put the link down below in the description, but it was this exact same formation that happened on the gold markets very recently that actually played out almost perfectly, and it was a big trade for me that I was able to make a really good amount of money on. So make sure to go have a look at that. It explains how we use these X formations for volatility funnels. But back onto the charts, as we can see, this level now, this downward support level, so if I used some more down arrows, we got an arrow down here, so we can see that there's a level here. We can see again there's more resistance here, there's more resistance, so there's a breakout over here. Now, the next one that we would like to see is, okay, well, could there be a possible level over here? So if we take this, basically, if we have a look on this level here, we could see that there's a possible projection for coming to this level, which is going to be that $45 a barrel level. Now, if we take $50 minus 42, well, we're going to be landing up with $8 a barrel. We halve that, we've got $4 a barrel. So $4 down from $50 is $46 a barrel. The trend line is sitting at $45 a barrel. So anything between $46 to $45 a barrel could be what I call a trend support line. So it's not a horizontal support line, it's a downward trend support line. So point number 5 would be a 45 to 46 trend support line. What that allows me to do is at least not only know what the horizontal Do you know what I find amazing is that I have not received a single phone call this entire day today. I sit at 3:30 now. I've received 4 phone calls and 9 messages from clients in the span of 15 minutes. That is what I call a very suspicious coincidence. I kid you not, this happens every single time I film a video. That is why I film my videos usually at midnight. This is the first video I've filmed during work hours. That is quite interesting. Back onto the charts now. Let's hope no one interrupts us. These are my 5 points that I'm looking at. So now at least I know what the support level is, what the previous support level is, which is that $42 a barrel. I've got that downward trend support level, which is the $45 to $46 a barrel. And then I've got that ghost support level, which is that whole number resistance. Now, the reason why I call it a ghost support level is because it's a whole number resistance and there's no previous levels that strongly tested that point. Now, there definitely are levels that I can see that did test that point, but we definitely did have price action push higher to about $53, $54 a barrel as well. So that is also another point I'd have to consider. Now, the next point back onto the charts is going to be having a look at the Bollinger Bands. Now, I do know I have not uploaded a video on the Bollinger Bands yet, but I will be doing that soon. So stay subscribed to the channel. Now, what I can definitely see here is the Bollinger Bands are showing us a lot of very bearish momentum side. So if you have a look previously, we had price action coming down to these levels in the past, where price action would effectively test these levels, hit the Bollinger Band level, and then bounce back up from it. Constantly, we had a little bit of selling momentum here, we had selling momentum there, so that does happen. Now, the reason why, if someone says to me, oh, but this level over here, you can see that the Bollinger Band has been pierced for a very long period of time. Now, what people need to realize about that specific point right there on the chart is that was when the shale oil and gas boom occurred. Now, shale technology is a way to extrapolate oil and gas from the ground in a much more cost-effective manner and a much quicker manner. Now, what that allows the oil and gas companies to do is maximize their output. During that period of time, oil and gas companies in the US were producing so much oil at such a high amount that they oversupplied the market, and next thing, we had the oil market fall through the floor. Now, what people can say about right now is we're definitely coming into that time, possibly again. The US in 2018 recently became the biggest oil producer on the planet and will continue to rise. But now, given the fact that in a very short period of time, it's in about a week or two, OPEC will be meeting with their counterparts about where they would like to take the oil market. Now, obviously, throughout 2017, they were basically focusing on producing as many production cuts as possible. Then they got rid of those production cuts and the oil market's price has fallen through the floor. So now they've obviously screwed the pooch slightly, and now the oil price is too low for Saudi Arabia because Saudi Arabia focuses on using traditional methods to produce oil that is a lot more expensive, whereas shale and gas technology makes it a lot cheaper and cost efficient. So now the fact that the US is leading the oil market and they are not part of the OPEC group, that makes it a little bit more difficult because the US can produce oil at a much cheaper price. But given the fact that there are new ties between the US and Saudi Arabia, you could possibly see that the US might try and slow down production slightly. Obviously, for the US, they want to try and sell oil at a much more expensive price per barrel. But it all comes down to the political agendas and the political ties between the countries. Most importantly, we need to still have a look at the technical aspects. The Bollinger Band is a good assistance for us. Now, it's something that we can still add to the list, saying that the Bollinger Bands are showing that it's definitely very oversold. So that is another point that I can add to point number 6 here. But once again, as we can see previously during the shale boom time back in 2014, this does happen where basically the Bollinger Bands do not work, but also on top of that, the Stochastic doesn't work. So that's also why you kind of have to go back to the fundamental aspects, which is why trading, sometimes technicals don't work and sometimes fundamentals don't work. And that's kind of the dynamic of when you trade the oil markets. Now, once again, everyone, I'm going to end this video a little bit short for you now because this is a 20-minute long video already and I don't want to take up too much of your time going forward. Please make sure to let me know if you thought this was a nice video, if you'd liked me showing you a lot more about how I analyze the oil markets. I tell you what, if I get enough comments down below saying I should do part 2 of this video, I will make sure to do part 2, and I will make sure to actually upload more regarding the fundamental aspects, which I really don't talk about too much. So I'll talk about what might be happening with the OPEC meeting, etc., etc. So make sure to leave a like if you think I should do part 2, and also just comment and say, make sure to do part 2 to this video. Once again, everyone, to anyone who wants to find out more about our training academy and how we train students in over 28 countries around the world, like I said, I run a specialized online training academy that I built that allows students to train through the internet or even through their mobile phone on a specialized application that we've built. It allows students to learn about everything from ground zero all the way up to the most advanced techniques that I use in the market that create success for myself. It's only $470 per student for 12 months of training. It's incredible value for money. And on top of that, they get access to 12 months of coaching with myself and my team. To anyone who wants to find out more about that, you can visit www.msequitiestrading.com, or you can email study@msequitiestrading.com and ask for more information. Once again, everyone, thank you so much for tuning into this video, and I will see you in the next one. Cheers for now.